Good afternoon, everyone. I'm sure each one of you are just trying to log in right now. We are exactly at 3 o'clock, and we will have next 60 minutes understanding more about this KYC AML master direction. I think there have been a lot of discussion around that, and there are a lot of guys who have reached out to me. When are you going to do this session? And honestly, I think the changes were very micro and difficult to read through. And honestly, while I had gone through earlier, personally, it took me another, I would say, solid full yesterday to review it and all and figure out what changes are more out there. So it is complicated, right? And this nitty-gritties and line by line. It is also linked to a lot of interpretations which can come up, saying you interpret differently, I interpret differently. There's also a framework that in previous sessions, they were never called out that which is a preferred method of doing KYC. So that has been called out. There are processes which have been added. For example, wire transfer was never in the document. That has been added. It was always part of AML, interestingly, but it was not called out in the document as clearly as they've done right now. So we'll talk about some of these in the session. My suggestion to all of you is do please raise your questions on the panel. Today, what we'll do with our guest here or a co-speaker here, Abhishek, who is an expert and he's founder and CEO of ZIGRAM, which is a RegTech company. He will also talk his perspective. So I think today in that almost like 60 minutes, you should get a good view of it. Do we know perfectly everything about it? At least I don't know. And I'll also look up to Abhishek to guide me more on that. So I'm really eager to learn myself. And in terms of your questions and all, if we can't solve all of them, please keep sending out. We will try to work on and respond back if we can, fortunately, if we are able to get those answers. So with this, we start. I welcome all of you to join us. And I can keep seeing what we will get are joining right now. So thank you guys for joining. As you may have heard about us, we are Asia's largest and of course, the first one as well on fintech and digital finance. We focus only on consulting in this business. And also we have an anchor event called Bharat Fintech Summit, which many of you had joined last time. I think it's coming up back again next year on 7th and 8th of February. And I'm really eager for many of you to join there. And of course, we'll do more sessions on RegTech there. These are a set of customers we have, and we are keep enriching our customers continuously. And over a period of time, we want to be very deep in embedded finance, as well as banking and all of that. These are some of the services. I'll quickly, many of you are already aware, so it's not pushed, but I think we are seeing a lot of traction on digital banking. A lot of people are building up new stacks around that. Embedded finance is becoming larger and larger, and some bit of work we are doing on research and open banking advisory as well. Now, I think as we spoke about the topic, it's basically topic. The first part is what are the amendments which have happened? And of course, what are the impacts of those amendments on procedural as well as system side? So the tech side, we will have Abhishek Bali, who's a co-founder and CEO of ZIGRAM. He will take it. Maybe at this point of time, I suggest maybe Abhishek, you could quickly introduce yourself and then we'll proceed.
Sure, thanks a lot, Samir. Thank you everyone for joining in, and also those of you who are currently joining in. It's a pleasure to speak to everybody here and contribute towards the general upliftment of the AML KYC community through this webinar. As Samir mentioned, I am the CEO and co-founder of ZIGRAM. At ZIGRAM, we are a RegTech company focused on 3 areas: anti-money laundering, financial crimes compliance, and emerging risks. We are one of the fastest growing companies in this space globally. We now have close to about 500 plus full-time folks. And our focus is really on delivering the integrated RegTech stack, which is a combination of data, technology, and services to help solve the problems of AML, financial crimes, and emerging risks. Personally, I've worked in over 15 years in the AML financial crime space. I work for organizations like KPMG, BMR Advisors, Dun & Bradstreet, and others. And a lot of my focus and a lot of my work is focused on building RegTech solutions in this space, plus also working on the data asset space, an area that I was fortunate enough to initiate globally about 10 years ago. I'm also ACAM certified, and I sit on the advisory board of ACFCS in India. So that's a little bit about me and about the organization. And I look forward to speaking to you about the RegTech technology and data impact of these amendments in the latter half of this webinar. Thanks, Abhishek.
Thank you, Abhishek. I think this, and I'm as eager as anybody else on understanding the implications from your side. Thank you. Thank you for joining us. I think I'll skip it for a moment. I'll come back later if required. But let's look at what RBI. I mean, for example, from a regulation perspective, RBI's regulation is what is driving us. The KYC, of course, there were a lot of master guidelines and guidelines earlier, but they came back with the master directive, which was issued in 2016, which is basically all encompassing, and that had gone through multiple iterations. Just from a journey perspective, there's the same document which allowed for Aadhaar OTP-based account opening, and then onwards, all the changes in the country, the whole regulatory environment changed once we had that kind of thing. So Kotak 811 to all the other innovations in the market are largely driven on top of that. And of course, in this particular document, they've added things around terrorist finance activity and maybe wire transfer has been added as such. And KYC, there are some amendments which are very, very crucial and critical for each one of you us to know. So I think if you look at the segments, some segments we clearly called out which are linked to wire transfers, which honestly were implicitly always understood to be there, but have been called out very specifically that wire transfer within the country, even if you do more than 50,000 rupees, RTGS, NEFT, even IMPS or UPI would go through the same kind of validations as I would want you to be careful about it as a forex transaction. So bit of history. I think 2016 February it came as a master directive, but primarily in December when it came and added account opening related stuff, which is OTP based eKYC or a loan until 60,000. That's when things changed. And then we had some issues in the market, and then we had only Aadhaar authentication to be done only by banks and nobody else. This is when during COVID, the digital went for a bit of a trip because offline was permitted to NBFCs. Then we obviously got into video KYC. I think it's a big change which happened again in Jan 2020, and that's where during COVID, this was the manner in which the business grew dramatically for many banks. Even PSU banks launched it. And of course, we came to a framework by which in 2021, they actually opened up the video KYC piece also for sole proprietors, which was a dramatic change, which helped in many of our MSME credit to get opened up for this. And of course, now they're trying to talk about additional pointers on CKYC, wire transfer, and stuff like that. So we'll talk about that in these slides. Generally, from AML perspective, while we think primarily from a single regulator, which is RBI, but of course, if you read this document, you will find FIUID as well as one of the regulators. And of course, generically, because there is so much of other challenges happening, the KYC is not enabled not just for banking, it is generically. So in this slide, we are trying to say what are the various laws which you have to focus on. For example, PMLA is a result in the KYC regulation from RBI. So PMLA was first enacted in the country, and then you had AML guidelines or KYC guidelines coming from RBI. Similarly, there is a regulation on Benami, there is a regulation on FEMA, and all of that. So all the regulation exists, and then RBI, FIUID, and SEBI, and Economic Wing, all of them come as a regulated entity. We will focus right now on RBI side, but there are obviously other flavors as well. And of course, from a purely from a penalty perspective, a lot of entities, the large entities, including Amazon or Ola or Canara Bank, all of them have been fined over a period of time. Interestingly, the number of incidents which have happened in the country are fairly high. But unlike in US and in Europe, where the fine rates are extremely high, in India, we have had, let's say last year was the year where overall fine was just $1 million. It's not very exceptional, but it could have been higher if the rate of what the charges which are laid are much higher, but they are not, RBI is not increasing the amount right now, but it would happen eventually to dissuade the players to avoid any kind of revenue growth at the type of at the risk of compliance. Now, I think from a framework perspective, let's look at some of the policy changes you need to think. I'm just looking at a broad level policy. You need to have a board level KYC policy, which was always there, but they have also called out that you need to have group wide policy. Many people would have said, okay, let's say, for example, XYZ bank may have a group itself. So the group-wide policy will exist, which will ensure that all the entire group, I mean, technically, let's say Aditya Birla Capital will have to create a group-wide policy as well, because some of them will be overlapping. So there's a group-level policy as such. In terms of some of the stuff on designated director and principal, it was always there, but they're saying you cannot have a single one. There's a worry that people were creating a single designated director and principal always the same. They're segregating that out. Of course, it was implicitly there earlier as well. In terms of customer acceptance policy, whatever the regulator says you should take from the customer, anything extra or explicit you're taking to the customer, you must get a proper consent from the customer perspective. So that's a critical part which they've called out. Also, from a GST verification perspective, people will give GST number. They've called out that you must do a mandatory validation immediately. You can't say that I have taken GST number, but we don't know. You must take it. Of course, it is relevant only for a MSME or corporate, but you must do it. You can't have a scenario where you have taken data, but you're not validated. Please do validate right now, right there. From a procedure perspective or a customer identification procedure perspective, even when you are doing international money transfer, customer identification is required even for non-account customer. Implicitly, it was always there. It's just getting called out in more detail. On risk management side, there are added some more pointers on profile management. But very interesting, they were called out that when you do risk management and you call out that is a high risk customer, medium risk customer, or a low risk customer, you should not tell the customer that you are a high risk or medium risk or low risk. That is not to be told. Of course, customer, if he is smart enough, will know that if he is getting called for his CKYC or KYC to be done every 2 years, he will know that he or she will know that he is a high risk customer. But you should not be telling the customer you are a high risk customer. So that's something which the regulator is thinking that you should not be communicating to them as such. And of course, one more point, which is again implicit, that if you believe that the customer is money laundering, you should not try to do a customer due diligence, but allow that transaction to happen so that you can report it back, so that they should not get suspect that their money is getting tracked. So they're saying, okay, allow it to happen, but please report. Right? Don't try to do too much of due diligence in such cases where you're very sure that the customer is going to be sort of doing something wrong. In terms of critical points which we need to focus on the due diligence side, I think earlier the VKYC process or VC process, as you call out, was permitted only on your own network and on your own infrastructure. I think they're okay to move it to cloud deployment. But in this case, they're clearly calling out that as a regulated entity, you own the data. And the cloud provider should not retain any data. You need to keep moving the data out. And of course, from a storage perspective and all, they're saying you please remove it and take it with yourself. So critical part. Also on small accounts, I think what they're saying is when you're doing small accounts opening with a limited data points, if there is any Forex transaction happening, then you have to do full KYC. On a small account, or a account where like a Jantan, you can't do a Forex transaction at all, and you must do a full KYC as well. So this is something which has been called out. In terms of record management, from a process perspective, plan perspective, all the documentation has to be recorded and stored, which was always, I think, implicitly there. Also from a non-profit organization, they've added an activity that whenever you do non-profit organization KYC, you must report it on Darpan portal of Niti Aayog. It was not shared earlier. So that is a place we are saying all the kind of such entities has to be recorded. And this registration process has to be maintained on your side as well. So I think critical part here from operations perspective or process perspective, you must ensure that whenever you do a non-profit organization, you must register in Darpan. It is an additional activity which has been added to the process as well. There's a call out for NBFC, which is to say that you can open account worth less than 50,000 rupees, but with a limited kind of controls. But you need to ensure that within 12 months, it moves to a normal due diligence as well. So that's a kind of point. Also for a legal entity, let's say, when you say legal entity like sole proprietors के लिए पहले उद्यम आधार was not clearly called out. It's called out as one of the documents. So उद्यम आधार is one of the easiest document to take. I myself took it a few months back, and it took me not more than 7 to 8 minutes to take it online. So if you have Aadhaar, you can do this Udyam Aadhaar as well. So with Aadhaar, Udyam Aadhaar, and one more document, you actually can open account easily. So that's one good thing. On the legal entities like a partnership or a private limited, they have added 2 more activities in terms of critical person out there and some details around that. So you can have a look at that. But few more pointers added only to the legal entities like a private limited companies. In terms of due diligence as such, I think one critical part, I'll talk about the key changes are coming here. I think many of you must be having questions around these. I'll talk through it as we go forward. I think one critical part in the due diligence is that OTP should be only to the mobile number of the customer, which is linked to the Aadhaar, which is critical. And any process change, any mobile number change has to go through a board level process policy. So bank should always link a mobile number to Aadhaar based account, and any change has to go through a board level policy. So this has to be done because everybody's worrying in the country, if the mobile number is changed, then what happens? There is risk attached to it. So that's what they're calling out. Now let's move to the critical part, which everybody is waiting for. In terms of process perspective, they're saying VCAPI is the preferred mode of remote onboarding, which means that they're saying, please think about it, do only VCIP, or you do only Aadhaar plus OTP and ensure that it's 12 months. But try to avoid, and technically try to avoid anything like what am I missing? So yeah, so anything other than that, which is CKYC, you should avoid. You should also avoid DigiLocker-based account opening, and that's what they're calling out. So if you are doing anything other than VCIP, if you look at it, it is something as an issue. They're calling out transaction restricted to the mobile number used for account opening, fine. PAN verification mandatory, okay. But initial transaction to be created from an existing KYC compliant account of the customer, which means that any other way of creating is not okay. Any third party transferring is not okay. Such customers consider high risk till face-to-face interaction or KYC. So they're saying even if you do all of that, it's a high risk customer is automatic. Even if it's a low risk customer, because he's come on board in this process, it will be an issue. And you need to, before you do any transaction, you must take a positive confirmation of current address verification, which is a huge activity, which means that your account is not active. If you, let's say, for example, you do a CKYC account opening, or you do DigiLocker based account opening, you really cannot activate that account till you do a current address verification, which means that immediate account opening process will not work in this case. So many people do FD opening, many people do loan account opening, many lenders do that all the time. That will not be feasible anymore, and you need to go through this process. Sadly, that's what my understanding of the document is as of now. Periodic updating of KYC. So they are saying any kind of update can be done using Aadhaar OTP based KYC. You can actually update it. And you should ideally do it within 30 days. For example, if you change your address, ideally within 30 days, you should go and update that into the structure. There is also a thought process on kind of, let's say, terrorist financing and related stuff. You must deploy newer technology, AML, whatever you want to do, to ensure that any kind of risk related to terrorist financing can be controlled. So there is a thought process around that. I know it's a very large document, almost 100-page document, which I'm summarizing. So I may be some slightly off here and there. And there's also clearly discussion coming on the wire transfer. So wire transfer, in your mind, you should remember is that they consider wire transfer as an international transaction, incoming and outgoing both. And also on top of that, they're also saying that if any kind of transaction within the country as well, including IMPS, RTGS, NEFT, UPI, any kind of transaction will also come under a wire transfer. They're only saying that what is not coming under the same framework is that when you buy anything using credit card, debit card, or prepaid for goods and services are exempted for wire transfer. So that is the only transaction which you need not bother about it. Except of that, everything else you need to actually scan. Just interestingly, everybody was doing it earlier too. It has been just called out that what you need to do, for example, when you're doing transaction, you must have a data on the originator and beneficiary details, names, address, national identity number, all the counterparty details should be there. So which means that in Benny side, you may be avoiding it. You need to add that process to it. Batch transfer, it's very interestingly given then batch, obviously single, double, multi-thread. You will not need that data everywhere. So you can, that's fine. Domestic transaction, you must, where the originator is not a counter, must also include originator and beneficiary information. So which is they're saying that you must include for that anything above 50K, you must have that. And yeah, I think there's a lot of other details around that. I'll skip it for a moment. But it has, if you were to open a document, you need to ensure that you comply with it. My personal gut feel is that it has been there as an AML. 10 years back, I was the CTO of the bank. You were complying with the same process. But it's just that it's possible that people may have lost some touch here and there. They've called out in this document. For each entity, they have clearly called out the responsibility. When you are an originator, when you are initiating the transaction, what you should store on the wire transfer side, what the beneficiary should be storing, what data should be storing, what the intermediary. So when you do remittance, transaction goes through multiple steps, right? So there will be intermediary out there. What is the responsibility of there? That's getting called out. And in case of MTSS, which is the MoneyGram kind of entities, they've clearly called out that they have to be responsible for every activity, and they have to file STR with FIU. My understanding they must be doing earlier too. In this document, they have added this point part as well. What is the responsibility of MTSS? Any fraud chances also have to be avoided in that side as well. There's a new document which has been added to it, which is the weapons of mass destruction. How does it impact the process wise? It may not have much process impact because technically it is very similar to any kind of other international list you need to track against. All of that again for this. FIU IND is the entity with which you need to do reporting, but they're trying to say that anybody else is doing anything wrong with the weapons of mass destruction. How do you control it? What kind of flows you need to take care of? What kind of reporting you should do? All of that is coming here. That's a very interesting. I mean, I did not know that it will come in the KYC process, but it is there. But if you look at summarize all of that, I would believe that from a compliance obligation perspective, first thing first, you should ensure that if you are already on your premise or that data, you can move to cloud on if you require. That will reduce your cost. But if you go to cloud, ensure that your relevant data is moved back. I'm talking in terms of video KYC and all. In terms of technology investment, you will need to obviously put some more infra in, more up reporting in. The kind of regulations are increasing. That's for surely for more. In terms of enhanced due diligence, we need to be very, very careful about now doing any kind of KYC based on purely on DigiLocker and others. I think that will die. All NBFCs will also move to video KYC. There will be a sudden uptake of video KYC in the market. More and more NBFC will also move towards that, as anything else is not permitted anymore. I'll pause now. I'll see one or two questions, and then I'll hand it over to Abhishek to take it forward from a technology perspective and pause here. Let me see if there are questions which I can respond back. Otherwise, we can. Okay. I think Anjali Meena is saying that, can you explain NBFC part in brief? I think you might have picked up earlier on, but critical part which you should know as NBFCs were, so banks were always told that CKYC is not permitted. You cannot use it for all operation purposes or for account opening. But in NBFC side, there was a leeway available. That leeway has been removed. So as an NBFC, you need to be doing the KYC, full KYC, and that's either the face-to-face one or you do video KYC. I think anything else will be a challenge. Of course, if you're doing a lending below 60,000 bucks, you actually can do it with Aadhaar plus OTP. Let me see if there are any other questions I can pick it up. What are challenges of cross-border transfer from counterparty-based point of view? I think I'll not jump into it. Maybe we'll take this question. Is it mandatory to have a CKYC done for NBFC? If yes, then is DOJ-based KYC is not enough. I will not go into company-based stuff, but CKYC-based account opening is not permitted anymore. At least if it is permitted, you have to do a extended or enhanced due diligence, which will be overhead. And you can't activate the account till you do some physical check or CPV as you call it. So it is an overhead which you need to be conscious about. I'll pause now. I think there are questions coming up, but I'll try to take those questions as we go forward, try to respond back on the online. And with this, I hand it over to the expert here, Abhishek, to take it forward. And as Abhishek has said, I'm also as eager. So over to you, and please train us and give us guidance. Or to all the guys who are looking out for this deck, we'll share to all of you who will actually share the feedback back. So the link has been shared just now to each one of you. Please respond back with your feedback. And those who will give us feedback, we'll share the deck back with you. With this, I pause. Many of you have raised your hands. Just hold on. We'll take it later. So what do you, Abhishek?
Thanks, Samir. Let me just go ahead and first share my screen. Great. I'm going to start by first setting the context of why does RegTech even matter? Why does technology and data even matter when it comes to some of the AML KYC requirements, not just under this master direction, but globally? So first is AML compliance as risk is becoming increasingly technology dependent. In fact, if you look at the second point, that regulators and government expectations are also there to leverage appropriate technology, that can actually now clearly be seen in this master direction. If you look at this master direction, the number of callouts that have been made by the regulator, not just the RBI, but also SEBI and others, specifying the need to apply the appropriate technology is quite phenomenal. If you were to read initial sort of versions of master direction, you would see that most of the focus was on process, most of the focus was on form, but this master direction also brings in the perspective of function, of talking about artificial intelligence, talking about machine learning, talking about having a monitoring system, talking about name screening, talking about using CKYC, talking about making sure that your data is on the cloud, that you have ownership of it, so on and so forth. So I think that is why RegTech matters. And because of the dynamic and constantly changing lists, scenarios, external events, it is becoming almost impossible to try and manage some of these AML requirements manually or in a manual heavy manner. Further, there are now expectations from correspondent banking relationships and financial institution partners. When we go into meetings with fintech companies, NBFCs, go into meetings with banks, financial institutions, one of the things that clearly comes in is that we now see drivers being both the regulator as well as the relationships. Because now relationships are in a sense elevating the level of compliance. And so many of you will find that your partners, in addition to your regulators, are now expecting a certain sort of level of systems and technology in place. Then the other thing that has been called out by the regulator, by RBI this time, is that there is a certain acceptance of the fact that machine learning, artificial intelligence, and data science can play a constructive role, whether it is related to due diligence, whether it's related to monitoring, whether it's related to screening. Now, this is very important because what it does is it lets banks and REs and others know that this is definitely a direction that they need to push forward in and they need to look at. The next is the fact that when you look at the risk-based approach, again, something that has been called out as part of this amendments in the master direction, a risk-based approach for customers means you look at the diligence and screening requirements for a customer based on the assumed risk. And then you change the assumed risk in an automated rule-based manner based on transaction monitoring, outcomes, other external events, and everything else. Now, that would be very difficult to do given the volume that the average RE in India has. We're not talking about 100, 200, 300 customers anymore. We're talking about hundreds of thousands, millions of customers. And therefore, a rule-based approach to making sure that the appropriate risk tag and flags can be applied to a customer are very important. And that can only happen through the application of algorithms and therefore RegTech. Next is customer identification and verification. I think that is an area that has been fairly well defined in India with the usage of Aadhaar, PAN, GST, and other verification driven APIs that are very pushed by the government and also offered by a number of players in the ID verification space. Next is with the coming data privacy laws. In fact, that's something that the data privacy protection bill was just, I think, yesterday or day before signed off by the cabinet. You will see a lot of focus coming in when it comes to data privacy, security, ownership. Ownership is a very interesting thing in this particular master direction, which has been called out as making sure that the REs have ownership for the kind of VKYC, the documents and others that they have, that they can make sure that it's on the cloud, that it's owned by them, and the appropriate privacy and security is in place. Then we've got other emerging risk areas, whether it's crypto, it's ESG, human rights. Beyond AML and KYC, there are these other risk areas that are coming up towards the horizon. And as the number of use cases and as the number of third parties change, we will need RegTech to be able to solve those problems. And finally, we are moving towards a space which is going from KYC to KYX. What that means is that the technologies and processes that are currently being defined and deployed and are matured in the KYC space are now going to go to KYX. X can stand for anything. It can stand for business, can stand for vendor, can stand for third party, can stand for employee and others. But those are now clearly seeing an uptrend. And banks and financial institutions are going to increasingly be under pressure to apply the same set of technologies and best practices and apply them to other use cases. We are already seeing this. We're already seeing this for a number of areas. And that's really why RegTech matters. So I would say that some of the biggest implications when it comes to the amendments, the two amendments made in April and May of this year to the master direction are actually from a RegTech and technology point of view. And that's really where we got talking and said, we may want to showcase this to the AML and KYC community. Moving forward, so let's talk about some of the indicated amendments, and I'll talk about these in detail. One of the big areas, which I will talk about a little more detail, that's come to us is now if you read through the master direction for a specified number of lists and specified number of regulations, the expectation is that daily name screening will happen for existing or onboarding customers. This is a massive change because by far, most REs in India don't really do daily monitoring, daily name screening at this point in time. There's never been the need to do it. It's usually at the time of onboarding. Some of them will go ahead and maybe do it on a regular basis as was expected. But now the master direction calls out the need to do daily name screening for a specified number of lists. Then the next part is the focus on VCIP and surrounding processes. There's a significant amount of literature that is written there, and Samir has spoken about it at some length. The other is the need to adopt a risk-based approach to manage and mitigate risks. Now, why this is important is because if one has to take a risk-based approach, it means all customers and entities that are currently being screened or under these norms have to constantly be updated for new risks or checked for new risks or their appropriateness or level of risk. And what that means is most REs will now have to have some module, some framework in place for the risk-based approach or risk-based framework. So that when those alerts come in from screening, when those alerts come in from EDD, when those alerts come in from KYC, when those alerts come in from new transactions or CTRs or STRs, they can flow back into the risk-based framework, and the appropriate changes for every customer can happen in a rule-based manner. So we'll probably see a lot of deployment of risk-based frameworks and risk-based modules or risk rating modules. There is a large amount of space that has been dedicated to wire transfers, and we'll talk a little bit about that because what that means is that now there is the expectation to do payment screening on live basis, which means as wire transfers are coming in or going out, you will need to check whether those wire transfers that are coming in going out beyond a certain level, especially if they're cross-border, needs to be checked for sanctions and other lists. And then the appropriate steps have to be taken either in terms of STR or blocking the transactions also. After that, something that I've mentioned now twice already, because it's very exciting, the need to leverage artificial intelligence, machine learning for ongoing diligence. And I think one of the reasons why that has been called out, apart from the fact that as a nation, we want to take a leap ahead in this space, is the fact that as monitoring becomes daily, as monitoring becomes more defined, as the number of scenarios increase, one may see a big jump in the number of alerts, and disambiguation of alerts will become a big problem or a big area of concern. And one of the areas to disambiguate alerts or to ensure that the appropriate alerts are getting generated or are getting disambiguated, there is going to be a significant investment that is going to be required in artificial intelligence, machine learning, to be able to disambiguate or at least support the disambiguation of those alerts. And that's one area that we are also investing in, and I see a number of organizations already focusing towards. And finally, is recognize the KYC is a valid KYC method for non-face-to-face onboarding. So those are some of the big impact areas when it comes to RegTech. When we talk about the RegTech impact areas, If you look at PEPs, user of identification, sanctions and watch list, transaction monitoring, name screening, ID verification systems, VCIP facial recognition, KYC workflows, regulatory reporting, cyber and data security, risk-based framework, training, CKYC, due diligence and payment screening. Across all these components, there will be requirements for most REs internally to have some RegTech technology or data implementation integration. Because as you read through the master direction, and as Sameer would have also mentioned in our in the conversation before this, there are now enhanced requirements across the board for all these components. And it's going to be difficult to adhere or align with them in a cost-effective manner by doing them in a manual-heavy manner. And therefore, we will definitely see technologies and systems and data changes across all of these. So one of my advice or one of my requests to everybody on this call, if you're part of a RE, if you're part of a bank or a financial institution, start mapping the impact, start mapping what you currently have in place for all these areas and see whether you need to relook at what technologies, what systems, what implementations you have in place to adhere to the master direction. And my sense is over the next few months, or at least 6 months, you will feel the need for changes across these, if not all of these, maybe a majority of these. The other thing I want to call out very specifically, because it's a big area of interest for us as I read through this, when you read the master direction, if you read the master direction today, just go onto the RBI website, read through it. Just search for the word daily, search for the word every day, search for the word periodic basis. And you will find that if you see below, there is now, in a sense, a direct or indirect expectation of ongoing monitoring and screening and subsequent reporting, where now for certain lists, like the Taliban sanction list, ISIL, Al-Qaeda sanction lists, the UNSC lists, the WND and the delivery system lists, there is now the expectation to do name screening daily, every day, or on a periodic basis. Most organizations that I've spoken to are right now figuring out how they're going to implement these, because maybe your screening systems are not aligned to them, maybe your alert management systems are not aligned to them, but this is going to be a big activity that's going to be required. And there's a lot of audit requirements, there's a lot of reporting requirements, there's a lot of screening requirements that are going to be there. And I think this is going to have a big impact as far as RegTech is concerned. Now let's look at some of the other areas of concern. So one is beneficial identification of beneficial owners. Now that's been lowered to about 10%. And what that means is one of the things that you will have the need to have a UBO database and identification process. And what that means is also in case there is a change in ownership, you need to have alert monitoring. One of the areas that is being currently explored is, can you have association maps to assess linkages between ownerships so that you can include all of those in your EDD and risk monitoring process. The other area that is interesting is that as part of your screening workflow, you then need to have a case-based screening rather than entity-based screening, because now you need to add all these names together and process them. The next is, of course, is CKYC. Digital verification is anywhere big area. I see a number of people already aligned to it. So though, especially with some of the process changes around Aadhaar OTP-based eKYC. When we look at enhanced due diligence is not just through VCIP. We also look at reports, level 1, level 2, level 3 reports. We also look at source of funds, source of wealth. For high-risk customers, those who may be tagged as PEPs, those who may come in some adverse news or others, there is going to be the need to have those reports in place so that you can take a educated call on whether you want to do business with that particular customer or not. Most importantly, whether they should be tagged as high risk or not. And to make sure that those documents are kept with you at all points of time, because my guess is that the record keeping requirements will need to be around for 3 to 5 years. Then when it comes to customer acceptance policy, of course, verification based on PAN, GST, and other documents are important. And Sameer has already spoken about that. But in addition to that, if you look at the transaction monitoring requirements, they have to be in place to identify any suspicious money laundering and terrorist financing. And I wanted to spend a minute to talk about that, because what that means is REs will need to have powerful rule building modules so that you can build multiple rules there, thereby to identify any transaction monitoring alerts. Many organizations have a problem in building those rules in a dynamic manner, going back and seeing whether those rules are impactful or not. And that's because of the limitation of their own systems. I think with the new master direction changes and the general FATF review that is happening and the trends that we are seeing, the three areas that we will see having the most elevated requirements of technology are going to be name screening, transaction monitoring, and payment screening. And I would recommend to everybody who's ready on this call to make sure that you can review those for your own RE, for your own organizations. The next is video-based CIP process. So, the updation and periodic updation for KYC for eligible customers is very important. If you look at the technology impact, having the right infrastructure, having the right partner, making sure that you have auditable and alteration-proof platform, that you have a secure network where video-based CIP can happen, where the data can be stored on your cloud, where you have ownership of that data, where you can review it. That's going to be very important. And then periodic testing to make sure whether it's facial recognition, whether it's storage of data, whether it's alert generation, those can be in place. So I think we are going to see a number of interesting changes in the video-based CIP process. Then we've got the updation and periodic updation of KYC. I think those have been clawed out, where high-risk customers, it happens once every 2 years, medium-risk customers happens every 8 years, low-risk customers happens every 10 years. And how do you build a system that automatically generates the alert whenever a new KYC updation is required, or if there is a change in the risk-based framework because of a STR filing and SCR filing or other changes, or because the customer has suddenly taken a high-risk product to others, that's going to be an interesting space. So the automation of the risk-based approach, the workflows, the alert generation system, so as to be able to tell a bank to update the KYC, that's going to also be a big area of growth for banks and for them to look at. Then we've got risk management. So there are going to be, that's one of the areas that Samir had spoken about. Periodic review of risk management for new products is going to be very important. If you look at point number 8, that has to do with the requirements, obligations, and the international agreements. So this is directly linked to the daily and periodic review screening requirements that I spoke about, which I said is going to be a big area of focus. And the reason for that is that now these rules and obligations require daily, ongoing, regular monitoring. You have to track any changes. You have to track any updates when it comes to those lists. You have to make sure you have an audit. You need to make sure that those lists are with you and that you've checked them, and you can audit and you can demonstrate to a regulator that the delta of those lists have been regularly checked against customers. Then, of course, record management, and there are a whole host of new reporting requirements to the FIU. And a number of us have been struggling with some of the STR reportings when it comes to FIU India, but we will see now that there's going to be a lot of focus as far as reporting is concerned, especially if you look at the wire transfer requirements and a bunch of the other requirements which are in alignment with FATF regulations. We'll see a lot of to and fro happen between FIU India and the REs when it comes to the actual reporting. In conclusion, there are a couple of big pointers I want to call out for all the attendees here. Number one, AML and compliance professionals now need to have a RegTech mindset and strategy for their organizations, because many of these new requirements and amendments and expectations from the regulator are clearly built on the fact that the regulator or the government now knows that REs, banks, financial institutions have access to the right RegTech, have access to the right platforms, have access to technologies across the world, and they want them to implement them. And therefore, it's not going to be easy for the IT heads, it's not going to be easy for the business heads, it's not going to be easy for the risk heads to set that mindset of RegTech, because it's only the use case owners who are going to be, or the AML owners who are going to be able to have that mindset. So a lot of education, a lot of mindset building to be able to create a 3 to 5 year plan is going to be very important. And that brings me into the second point. We definitely see a lot of investments and a lot of implementations when it comes to technology and systems in this space, so that you can look at serving the requirements over the next 3 to 5 year periods. Usually in India, because the way that we've been, I think many of our RegTech systems specific to AML and other compliance systems have not been optimal. But now I think we have the opportunity to be able to get some of the best systems in place, comparable to the rest of the world. But those have to then, that entire investment that you're going to make has to be able to solve the next 3 to 5 year partners. And therefore, our advice is going to be make sure that you're dealing with the right partners. Moving to daily monitoring via name screening against specific lists is a big ask. Come October, that's going to be an ask that is going to be clearly defined and expected. And our recommendation would be is that one should start planning for that. The next is the alignment to the risk-based approach. This is going to be a more strategic and a more well-defined plan that one has to put in place, because you're no longer talking about static risk rating for a customer, but more dynamic risk rating for a customer, and to be able to demonstrate it based on their transaction behavior of the customer. I think we'll now see risk rating and risk-based framework modules come up in a major way. Finally, enhanced focus on UBO identification. We'll see a lot of access that a lot of the AML and compliance folks will need to UBO information, registry information, documentation, and others, so that we are screening and adding the names of those individuals or the owners in an intelligent, meaningful manner and a comprehensive manner. Compliance folks and AML folks will have to create a blueprint for AI and machine learning implementations. I don't think this is going to be something that can be done in the next quarter automatically. I think we can start, but for it to be a more meaningful implementation, because ultimately it's going to help us comply better, it's going to help us reduce cost, and it's going to help us make sure that we are comprehensive in our compliance. That blueprint is going to be very important. Critical AML implications are going to be there for the following systems, platforms, and technologies. So if you have these systems and technologies in place, I would definitely recommend giving a fresh look to all of them. Name screening, transaction monitoring, payment screening, and video KYC. Please relook at them, see whether they align with the latest requirements or not, as outlined by Samir, because come October and in the coming year, a lot of the compliance and a lot of the fact that you're complying with these new regulations are going to depend on what is the quality of these systems and if these systems are ready or not. And finally, the new reality is that we are increasingly, as India is getting integrated into more and more into the global economy, global socio-political systems, and becoming a major power, we are going to have to increasingly align with FATF recommendation and global practices, not just FATF recommendations, but also global practices with increase in trade, increase in global ambitions. And we should therefore expect that regulators to also expect out of that. The last thing I just want to say is on the right-hand side, this is a little plug for ZIGRAM and what we do. We have a whole bunch of solutions that today enable organizations to meet many of these requirements, so that you're ready for October. And those names have been given on the right-hand side. These include lists, these include screening, these include new name screening, AML penalties, so on and so forth. I won't talk about it too much, but if you're really interested in these, I'm happy to sort of have a conversation post this webinar. So with that, I'm ending, and I'll hand it over to Samir, and happy to answer any questions that you may have.
Yeah, okay. So I think thanks, Abhishek. At least from my perspective, there are a lot of new elements you shared. I think there are a lot of questions which have come up, but while we will try to respond back to some of them. One of the questions which I was just looking at across, that what is group policy and what is a company policy? I'm not going into some very compliance-heavy jargons. I have understood that, read the document multiple times. Simplicity-wise, they're saying that a lot of entities will have groups as well. So banks are part of a large groups, even NBFCs are part of large groups, just focused on same segment. So what, at least from a BFSI perspective or banking financial services focus in group, they should all have a group level policy so that then you can link it up. So some of the entities may be SEBI registered, some of the entities may be RBS focused, some of them may be actually IRDA, but you need to look at both all the KYC process together and then build up a single charter and then ensure that all the other entities are actually inheriting some of the structures from the group. So I think this is what my take is. The second question which I heard about was, is there anywhere we've written that if you have done a DigiLocker based KYC or a CKYC based account opening, is it not permitted or not? I think if you look at the structure where they've clearly called out that enhanced due diligence has to be done only in those cases where it is neither face-to-face nor video KYC, and nor is it Aadhaar plus OTP. You need to do multiple activities out there. So there's a series of activities they have called out. And of course, all these accounts will be high risk. You can't create any transaction to it until unless maybe the CPV is done, which is the physical verification of the address is done. So there are a lot of constraints for it, which means that all of you guys, if you're an NBFC and sort of are using CKYC and all, you would actually migrate towards video KYC. So you will see anybody who's in video KYC must be getting incoming calls because that's where the push is. So I'll pause now. Maybe I know a lot of questions are still there. We'll pick it up as we go forward. But I'll, given that there's a possibility of you guys asking questions, I'm happy if you could raise your hands and we would take questions physically. It will make it more interactive. My request is again, if you could share your feedback. One of the question again is, will we get access to this deck? Yes, you will get access to this deck. But my request is if you could share your feedback back. Only those who are sharing their feedback will get access to this deck. So we'll share it across. But please go ahead and share do the feedback. Okay. So one of the question I'll not respond back on this bank or that bank, but Prashant is asking that some bank has onboarding process based on DigiLocker. Look, DigiLocker in a certain context may still be used, but if you are not doing video KYC and you are saying DigiLocker is the only sense in which you are opening account, you can't, right? So within video KYC, you can pull customer data from that side, so that you can do an add-on. But can it be a primary source for KYC? No, you will have to rebuild it as far as I can make out. You guys can, I mean, many of you are raising hands. Please go ahead and raise your hands. I'll try to allow you to ask your questions. There's also a question which came on screening. I think this is to you, Abhishek, which Ram is asking. Can you elaborate on case-basis screening versus entity?
Sure.
Can you just respond back?
So case-based screening versus entity-based screening, the difference is that when you have an entity-based screening, let's say I have onboarded a company as my customer, an organization as my customer, it's let's say ABC Private Limited. When I put in the name of ABC Private Limited, I'm just screening that name. But if the screening for the UBOs, the director, the key management person, the owners have to happen, let's say there are 4 or 5 owners of that company, let's say they're partners or others, you would effectively also need to look at who those are and also screen them in many cases to be able to determine if those owners are part of some sanction list, if those owners are part of some prohibited lists or not, because it will lead to the treatment of the customer reporting. What that means is those 4 or 5 names, the main entity, the anchor entity, as well as the associated people, they will all, while they're individual entities, they will all become one case. So they all need to be processed together, and then the outcome needs to reflect whether or not there has been any alert, any true positive alert that has been generated. That is what we like to call case-based screening, especially with the new UBO reality that we are dealing with.
Perfect. I think Gaurav has raised his hand. Gaurav, go ahead and with your question, please.
All right.
And please, Gaurav, please introduce yourself. Put your video on. Please introduce yourself so we know the background and go ahead and ask the question.
Okay, so pardon let me see if I can put the video on. Otherwise, pardon me for that. But let me go ahead and ask the question. Thanks for the wonderful session. My name is Gaurav Prakash. I represent Zone Startups India. I head strategy for them and also, work in the RegTech in the fintech space. The question here is, as per the master directions, there are 3-4 critical areas that REs need to be compliant with immediate effect, so to say. And all these, if you see, Abhishek, are kind of quite different, right? From KYC to transaction monitoring to risk management. Will this mean that the REs have to now gear up to be dealing with multiple vendors, startups, RegTechs, or smaller software companies than what they have done in the past, deal with the tech majors? How does an RE prepare? That's the question.
Sure. So it really depends, I think, on the scale and complexity of operations of that RE. Globally, what has happened is, unlike in India, globally, in fact, banks and financial institutions prefer to deal with different vendors and different providers for different components of their AML and KYC program. And the reason for this is that at the end of the day, regulators are quite clear that the responsibility and therefore the liability of compliance and appropriateness of lies with the RE itself. So when an RE is assessing an organization, they may, depending on the complexity, depending on the cost involved, depending on how many customers they have, they may decide to go for one player who has all these modules generally in place. But as the RE evolves, or if they are already a large enterprise, or if they're in special situations, many of them that I know of prefer the flexibility of dealing with multiple vendors, because what it also allows them to do is, one is it allows them to make sure that the point of the component that they have, they can comply better, but also they have not one dependency on one major player at any point of time, which can also have then systemic issues. So to answer your question, yes, it seems like we are generally going in that direction, where for a certain set of REs, they will need to deal with multiple parties who specialize in certain areas rather than one player who generally does everything.
Okay, thanks. That's helpful.
Okay. Prashant, please go ahead with the question.
Yeah. Hi, my name is Prashant. Thank you. I'm working with a company called McLaren, an IT company, a solution company where we deal with the fintechs and startups. My current project is also dealing with the same AML, KYC, FATF. Today also I saw the FATF requirement for US. I'm very much happy to see this session today. Exactly what I was thinking for a few weeks. I'm getting this. As part of the governance, the compliance, there is a requirement. How to? I have posted my question in the chat. How do we capture the beneficiary details for FATF recommendations? Say Prashant is initiating 100 rupees to Samir using Paytm as a channel. Yeah. Now, how do we capture it? It's a purely on technology question. Compliance level, I understand the technology. I'm not sure whether it's a right question to this forum, but I'm putting forward.
Sure. So I can tell you, for example, what happens in cross-border, right? Cross-border, there is a SWIFT message that comes in, and you have to look at the appropriateness of the SWIFT message, which has the name, the country, certain details, address, other details. In fact, the global challenges of some of the SWIFT messages that are coming, either the beneficiary or the originator. The challenge sometimes is the appropriateness of the name, the code, and other details, which are increasingly getting solved. Similarly, when you have, say, details related to, let's say, P2P transactions, UPI transactions, and others, they will happen between two regulated entities within India. And therefore, I think what the industry will move towards is to be able to find a way to send that information from one RE to the other, especially if it is a domestic transaction, for example, where the name, the details, and other things are captured, which theoretically should be relatively easier in India as compared to, say, cross-border. Because sometimes you don't know if it's coming in via another entity or so. So I think that how this was going to get solved, just like in many other cases, what happens is once we have to start complying with some of these requirements, and I have a relationship, let's say I'm an RE and talking to another RE and I have a relationship with them, you'll have to figure out a way of sort of sending that information across from one to the other. Now, when it comes to RTGS, NEFT, and others, I think that's fairly well defined because those details are already there. The beneficiary and the account details and everything else are already there. So it's going to be less of an issue. But when it comes to some of the other things, I think those still have to be figured out.
Yeah, good evening, everyone. My name is Prashant Adao.
Abhishek.
Yeah, Abhishek, thank you for your session. And this is the takeaway was for me that KYC to the KYX trend. Thanks for the note. So I would be more interested to know, maybe in this forum or maybe in the next session, about the risk-based approach for the KYC from the cyber and the data security point. Thank you.
Sure. So I think, Prashant, what happens is that when you look at the risk-based approach, there are multiple elements in the risk-based approach that are used as variables. So geography, type of customer, type of product, channel, face-to-face KYC, non-face-to-face KYC, X, Y, and Z. Those are all taken up at the time of onboarding of a customer. And then other additions are made in terms of transactions and others. So what one would do is you effectively create a framework which has all these elements, and then you give a weightage to different products. You give weightage to different type of customers. You give different weightage to different types of transactions. You give weightage to different types of geographies and others. For example, high-risk geographies, medium-risk geographies. When it comes to data and cybersecurity issues, the implication will be more, therefore, on the product. Which products are operated in such a manner that there is some data or cybersecurity adverse impact or potential adverse impact there. And that will go into then the risk rating of that product, so that when you have a weighted average taken for the risk rating, it will show up accordingly. So I think, to my understanding, the channel, what channel am I using to either open my account or to process, and to what is the kind of product I'm using, those two are going to have the greatest impact when it comes to data and cybersecurity moving forward.
Okay, thank you. But maybe a request for another session, which would be like an half an hour or for the cyber and data security. This is for the digital fifth. Thank you.
Yeah, we'll do that. We'll do that.
Okay, thank you. And have a nice evening ahead to all. Take care.
Thank you, Prashant. Thanks.
Thank you. So I think a lot of questions are further coming up. I guess it will take time for us to. We already run past our time. 3 minutes past. We'll try to assimilate some of this question and respond back. It will also be available on our YouTube channel, so you can go to YouTube and check the digital 15 to see all of that there. So I think you can do that. With this, I pause now and we stop, and we'll be back with the further set of sessions. Thank you, Abhishek, for guiding us on this area. It's a complex area, but given that a lot of work you've done, I think a lot of relevancy is coming in impactful stuff. That CKYX, the KYC versus KYX is interesting stuff because it's now complicated. We have to go entity by entity, but I think I am also learning, so we'll also figure out how to work together on this. Thank you, and thank you to everyone to join us. I think we had a humongous number of people joining us. It's amazing. Thank you guys. I'll be back.
Yeah. Thanks. Thank you, everyone. Thanks, Abhi. Take care.